1, 2, 3. Let's see now. 1, 2, 3. Okay, perfect. That's what it was. They didn't hear us. Oh boy. 1, 2, 3. 1, 2, 3. Hello, hello. Okay. What's up, everybody? This is Budismo Crypto, and we're back. Your host, John, and I have my guest, Crypto King. He's not a guest anymore. He's basically the co-host of the show.
Right.
He's a big part of the show. So, anyways, we're back, and on today's episode, we are going to do some technical analysis on Bitcoin just to see where it's at. You know, the market's scared right now. Nothing's really happening. Everybody's just in a standstill. And we're just going to take a look, see if there's, if we could tell, if we can predict any more movements, if it's going to keep going, if it's going to stay the same, keep going down or go up. We'll figure it out. We'll see. But I'm just going to let him get to it. Let me get out the way right here. Let's see.
Resistance. We'll get rid of everything and just look at it with some fresh eyes, and we'll go from there. So first of all, we are on the monthly time frame for the BTC chart. So now we have everything clean. Everything looks good here. The monthly time frame here. Bitcoin paired with the US dollar on the monthly time frame. So just looking at this here, you could see instead of we made our high, we made our low, we made our higher high, and we, for a few months, really 1, 2, 3, 4 months, we were creating a higher low until the current month, May, that we are in, almost the end of May. We have now came below our previous low, but it looks like Bitcoin is going to want to close above these levels and just have the wick formed here. So from here, let's get our Fibonacci, and we're going to draw from our swing high, which is here November of 2021. So we just click up there, and we're going to look here at the bottom of this candle on January of this year and extend it out and just look at it real fast, see what we're doing. I do like that, but I'm going to draw it from our current swing low in just a second. So you could see we came up here, we found support at the 61.8 before we broke all the way down. We came back up to the 61.8, chopped around a little bit, and now we're just on our way down, which potentially with our Fibonacci drawn from, what month was this? From November to January, so the swing high to the swing low on the wicks, you could see we could potentially come down to the 61.8 down here around $10,000, which would be potential, and that would be, pretty crazy for the market to deal with, but it's potential it could happen. Let me just tighten this one up a little bit on the swing high. Okay, so again, the swing high is drawn in November. Now the swing low, let's come down here. Instead of drawing it from the wick here on January, let's draw it to our current real swing low of May. Let's get it in there, and let's just look at it. So does this make just as much sense as the other one? Yes, of course, because you have your swing high, you have the dump down to the 61.8, you have some choppy movement here to the 78.6 before we just came right back down. So now if we look, that would bring us down to, wow.
Oh, that's scary.
Yeah, right. I don't even, I wouldn't be able to fathom that. My goodness. Okay, so we could just real quick, just for the bearish people, for the bullish people, excuse me. Let's do this. The setting doesn't want to, there we go. And we could reverse it. Let's take that off, and let's look at our upside potential. So the 61.8 on the upside is still in the, mid 90,000s, almost 100,000. If we are to, transition to become bullish once again. So that's giving us our overhead targets for the upside. And then you also saw our downside targets, which is basically Bitcoin becoming extinct. Okay. But for now, we'll stick with this Fibonacci right now because it does look good. Another way we could do, but I don't want to spend too much time on it, is we could go from candle body for the swing high to the wick for the swing low. And we could look at that. That makes a little bit more sense. Or we could go from candle body at the swing high to candle body at the swing low. And I mean, that's even cleaner as well. Mm-hmm. And that'll tighten our target. That'll bring us from about 96,000 to about 81,000 for the top for the swing. And let's reverse it real fast and let's get our swing low targets potentially, which, that would still bring us to around the $8,000 level, which I mean is still, that would be a nice reset for Bitcoin, but I do feel that would scare a lot of people out of the market. But again, anything's possible. So now that we have our Fibonacci drawn from candle body to candle body, let's go in a little bit deeper. And now we could look at, the weekly time frame. So switch over to the weekly time frame, adjust the chart. Yeah, see, I don't like the way that cuts right through there. So let's bring this up to at least this red wick here, October 18th. Right there, and see how it looks. Okay, I'm relatively happy with that. Which, why I'm doing that is because you have the top of that wick and pretty close to these two candle bodies. So I guess if we want to be exact, let's bring it to the top of these two weekly candle bodies. And now let's just look for some trend lines, counter trend lines that we could plot. One I'm looking at here is right here, October 18th, the top of the wick. Yeah. And here, November 8th, the top of that wick. So I'm going to click here on the 18th of October. And then just I'm just watching the touch point here. I'm just extending it out. Right there, we could just do that for now. I'll extend it. I guess I'll do it now. So let's just extend this out. So again, I'm just watching that second touch point, bringing it out here. Okay, so that's giving us a projected target for when we do start pumping. And then another, where we could look here, let's see, I'm looking at the bottom of this wick, these two wicks here, even potentially this wick here on January 24th and this wick here on February 21st. Let's do those two. So we're going to start here, click there, have this touch point right there, and just extend this out. Just to see when we do, finally start moving where we could potentially get rejected at here, retesting the Fibonacci again before blowing through and going in the Fibonacci sequence. But that doesn't look too great to me. So let's delete that and let's try to find another one. I like these two over here. So first touch point will be here September 20th, second touch point September 27th on the weekly time frame. So we'll click that. We're just watching that second touch point there and extending it out. Okay, so I like those two. Let's kind of zoom out and just look at that a little bit.
There's a little tighter range than the other one, right?
Exactly. So it's just potentially where we could come back into this range, because if we extend these all the way out here, still looking at these two touch points, but just extending it out to see the range. And we could do the same thing with this one. Again, we're looking at those two touch points, extending it back into the past. You could see, I mean, that's been a pretty clean range to where we broke through, found support, and then finally touched up at the top. So we would potentially, this would have to play out over a very long period of time. And I just messed up this Fibonacci. Okay, so
lock it.
Nice. I'm still thinking we might move it, but I'll lock it just to be safe. So, I mean, everything looks good. I mean, we have our for this specific channel, this was our most bullish. Once we broke above this, I mean, we were just crazy. But once we retested it, it was just weak. We fell right through before we created the bottom channel. We went for the move, couldn't do it. We found some momentum here before we blasted off to the top. So one, this hasn't been retested again. So you would expect this at some point to be retested, and it is lining up with the 61.8 over the top. And then this bottom one, it's never been retested as resistance. It's always been support here, support here, support, and then I guess you could call this a little resistance play before it just dumped out. But you would expect it, at least this trend line, to be retested again relatively soon. So that's why I still remain pretty bullish on crypto, especially, I mean, this 1 wick, this weekly could, start rocketing up and could be a wick as well. But until we get over some of these levels here, which I'll draw real quick with the rectangle drawing tool.
My favorite.
Exactly. So I'm just looking really at this wick right here on the 4th of January. So let's click at the top, come down to the bottom and extend it out. So really until we get past this range, we could make it a little bit tighter. Okay, so right now I'm looking at the top of this wick from January 4th, and I'm looking at the top of this candle body here on the 26th of July, and then I just extended everything out. Let's make it a little bit clearer, a little more. Come on, computer. There we go. Perfect. Okay, so you could see really until we get back into this level and above this level, I'll be super bullish, but really until then, there's not too much upside besides looking to see where we are. We're at such a low point. We haven't been to these points since January of 2021. So to say that this isn't a crazy buy would be saying you're just willing to give up a lot of profit, which would be saying you're willing to wait until these low levels here of around $7,000, $6,000 down to, like the $4,000 level. Which is this possible? Of course it's possible. But the same people that were screaming, buy the dip.
Yeah.
Buy the dip. Buy the dip. Buy the dip.
And then,
where are they now? This is an amazing buy. You know what I mean?
Yeah, because if we're looking at the whole picture, like when you go back to what was it, the first of what was the date? Go back right there. This one right here.
Yeah.
So it's only been
a year,
less than a year since we've seen this crazy movement on Bitcoin. So I mean,
no, it's been almost a year and a half.
Well, yeah, almost a year and a half. Oh, yeah, it's 21. Sorry,
right.
Yeah, sorry, but I mean, it's still though for that crazy amount of movement,
right?
And that's such a small period of time, comparing it to this whole span of things. I mean, yeah, I'm not a Bitcoin buyer because I don't have money right now for that. But either way, this will be the best time if you really, believe in crypto, this will be the best time to buy as well.
Right, because that's an 80% movement in the year and a half. And we chopped around there. So that's what I measured from the bottom to our highs, almost our highs.
How much of a percentage it went down, right?
80% just up. So just from here, this point, 80% came back down, came back up. You know what I mean? So we've just been moving along relatively well.
And most likely, if we regain that 80%, it's probably even going to surpass that.
Oh, yeah, because then everyone's going to come back to the market and
be all
excited. And, we're literally going to go to the moon at that point.
But okay, so what's your conclusion out of this?
Conclusion is the counter trend line here needs to be retested as resistance, because I really don't call this being retested as resistance.
Gotcha.
Because we really just fell out of there and fell through. So I mean, it's been support countless times, three full times of major support. So it needs to eventually be retested as resistance. But again, it's going to take some momentum to get there, because first we need to get back above the 236. We need to clear this crazy level of
what levels are that? Like 40
This is the top of the box is 41,000. Bottom of the box is 40,000. So $1,000 swing right in there. But until we, come back above that strong, retest it as support, go for the 61.8, go for the 78.6, then we could start expecting that trend line to be retested. But then, the other end is there's no real support keeping us where we are right now. But if we fall, we're falling at least to 11,000. Then from there we have 9,000, and all the people on Twitter will give you $1,000 range. So 11,000, 10,000, 9,000, 8,000. Like, no shit. No shit, man. But again, I'm still staying relatively bullish. I still expect us to start moving to the upside from here.
And all the big players are still, they're still betting on crypto. All the, that's the thing is that, they know when to get out, get their money out, and then call back in. That's all they're doing. It's not so much that they don't believe in it anymore. They're just kind of like waiting, like, okay, we'll just wait for you guys to make a move, and then we'll make our move.
Exactly. The transfer of wealth.
Exactly. So you want to be on their side when that happens.
Right.
But I think that's pretty much it. I guess our target price will be 40,000, and then then we'll go see if that's gonna set the tone for what's gonna happen with Bitcoin.
Exactly.
After this, I mean, it's looking pretty boring right now. Nothing's really going on. Everybody's now just kind of staying around the same price. People are so bearish, even though it's like at 29,000 right now, which I think that's still a good ass price. But whatever. But I guess that's it for this. We just wanted to give you a quick update on Bitcoin and give you guys a quick analysis, see where we're at, and we're still bullish on crypto overall. We're not giving up yet. We're in it with you guys. So we'll be back again with another video after this, but we're gonna cut this short, and then I will be back again. So thank you guys for watching. I love you. I'll talk to you guys later. Perfect.